What's the best place to put your money during times of high record inflation? Buying real estate might not be favorable with the current high interest rates, but there are other ways to invest in 2022. Also, we'll tell you the best investment to make in 2022 that's fully inflation-proof. Don't swipe or click away because we'll discuss what assets you should invest in right now. Short-term government bond funds. If debt has become more expensive with the rise of interest rates, that makes bonds a worthwhile investment. But instead of buying just one type of bond, take advantage of diversification and buy a bond fund. Short-term government bond funds are either ETFs or mutual funds, where you will buy part of the debt securities issued by the U.S. Many online brokers offer the chance to purchase bond funds in the form of ETFs or mutual funds. Remember that with the ETF, you pay no commission, but if you invest in a mutual fund investing in short-term government bonds, then you are likely to pay high commissions, which will cut your earnings significantly. That being said, these bond funds are a great investment for new investors or those that don't like taking on too much risk. That's because the bond funds are backed up by the full faith and credit of the government, and it makes them one of the safest investments you can make. However, because they are short-term bonds, they might become less valuable if interest rates keep rising in the future. Dividend stock funds. Dividend-paying stocks are a great investment for 2022. In fact, they're a good investment for almost any time. You get the double benefit of not only long-term market appreciation, but also yearly dividends. And a 3 to 5% cash flow on investments never hurt anyone. But in order to offset the huge risk that comes with buying individual stocks, it would be wiser to buy something called a dividend stock fund. When you buy these funds, you will smash that like button just like you should if you haven't done so already. But no, in all seriousness, you will buy a basket of stocks. They are all dividend-paying stocks, and you will receive the average of all dividends in your fund. Let's say you have one stock paying 6% and another 4% dividend. Well, in that case, you will get a 5% dividend. The dividend stock funds are a great investment vehicle for almost any investor, but they will be especially beneficial to those who need additional income. You can choose to take out the yearly dividends if you need additional cash flow, or you can go for a DRIP, which will buy more stocks in the fund using the generated dividend income. They can be bought at any broker, and just like bond funds, they are sold in the form of ETFs or as mutual funds. Series 1 bonds. When it comes to safe investments, few are safer than the Series 1 bonds. Why? Because unlike other bonds, which have a fixed interest rate, these bonds fluctuate based on the inflation rate of the government. What does this mean for you? Well, if we assume that the inflation rate rises to 9%, the government will pay you a 9% interest rate. If, however, the government inflation rate falls to 2%, then the interest rate will also fall to 2%. So, from this, we can safely say that the Series 1 bonds are the safest hedge against inflation. Once bought, they will pay you interest for the coming 30 years. Unless sold, the investor takes up the least amount of risk and makes sure his or her investments keep up with the pace of inflation. However, there is a catch. You can't buy $3 million worth of Series 1 bonds in every fiscal year. You can only buy $10,000 worth of Series 1 bonds. They can be bought directly from the U.S. Treasury. And because it's the government, you will not be paying any commissions when purchasing. Art and collectibles. Logan Paul has impacted the price of Pokemon cards and those who are trading it. Immediately, there was a spike in demand, which made prices skyrocket. Or how about this rare Superman comic book that sold for roughly $2.6 million? Even a Rolex Submariner has been able to outperform gold and the real estate market. For example, if someone gave you $5,000 to either buy gold or a Rolex Submariner, the financially wise choice would have been the gold. But the numbers say otherwise. Alternative investments are always a good hedge against inflation. However, the problem is liquidity. You see, if you need the cash right away, you're going to be forced to sell the collectible, even at a loss. But there's a trick to avoid this. You see, Some investors like to spend no more than 5% of their net worth on collectibles. That way, they won't be forced to sell during financially troubled times. And if you can wait, then your chances of selling when prices are the highest increase dramatically. Index funds. Regardless of the situation, index funds have historically performed well even during times of high inflation. For example, an index fund by Vanguard that tracks the performance of the top 500 companies in the US offers you the chance to own all of these stocks for a fraction of the cost. For example, if you were to buy one stock in each of the 500 companies that the S&P 500 index fund has, then you would have to spend, drumroll please, $110,000. Compare that to the Vanguard 500 Index Fund Admiral shares, which go for $375.37 at the moment. Also, if you invest a small sum of money every month for 25 years in a fund like this and assume an average interest rate of 8% per year, then at the end of the 25 years, you would have $87,727.13. If you were to save that money, you would only have $30,000 in the bank. So by investing in the S&P 500, you are getting $57,000 more in the long term. In addition, Jack Bogle, the founder of Vanguard, has written a book called The Little Book of Common Sense Investing, where he compared the performance of the index funds and the mutual funds. He found out that over a period of 10 years, only a few investors have managed to outperform the S&P 500 index fund. The majority of them didn't even come close to it. So if you want a nearby bulletproof investing strategy, index funds is the way to go. Invest in yourself. Warren Buffett, the greatest investor of all time, says that the best investment anyone can make is in themselves. In the past, he has given speeches and lectures to many high school and college students. This question would pop up every time, and every time, he would say the same thing. Invest in yourself. That's the best investment you can possibly make. Whether it's a recession, depression, or a time with high inflation like we have right now, investing in yourself will pay the best dividends. The reason is simple. If your value in the marketplace is high, your earning potential is high. Couple that with a strong work ethic, and you basically have an all-weather strategy for making money. This means the best way to invest something like $1,000 would be in yourself. Use your earned income to acquire highly valuable skills, and you will be unstoppable. Do you think a good surgeon worries about the high inflation and the price of gas at the moment? She doesn't care where the market is going or what it is doing because she knows that people will need good surgeons always. If you invest your money in acquiring a timeless skill that's very valuable, then you have built a recession-proof strategy. It is timeless advice passed on by giants like Henry Ford, Mark Cuban, Bill Gates, and so many others. On a related note, do you agree that investing in yourself is the best investment? You can tell us in the comment section below. If you like more videos like these, don't forget to subscribe to our channel and hit the bell icon so you never miss any of them. And as always, thanks for watching, guys.